Welcome back, YouTube community. Welcome to the BBS community that are watching us today. Hope you've had a good Tuesday. Let's have a look at the charts. We can see that Bitcoin's up nearly 3%, Ethereum just over 4.5%. We've got BNB up, we've got Solana up, we've got XRP up. So we've got a bit of a green day today, which is always good. But we'll have a quick look at the charts to see how healthy the market's looking. And you'd see that Bitcoin, we said that we're coming back to test these lower levels here. We haven't quite managed to test the June 2021 low, which was signalled by this yellow line, and that's 29,000, and it's just 28,949, and that's on the Binance chart on the daily. So I haven't managed to test that level again yet, so that's currently a possibility. The bulls are fighting at the moment, and if we look at the lower time frame, we can see if we can decipher as to whether the bulls or the bears are winning the battle. So you've made your base here, temporary, come down. You see this we've got just about a higher close here, but the bears managed to push this candle down around 50%, which signals a little bit of weakness. What we're probably likely to come and do next is come back and retest these areas here, see if we can get some kind of a confirmation, and we may be able to try and retest the levels of these previous lows here. If we break past them, these are the levels that we need to break and close above. But you've got the 200 moving average here. Don't forget this is the 4 hour, so you've got the 200 moving average curving down as well, which is always a negative sign, and that'll act as additional confluence in this area here where we've got the resistance level from the previous bottom here. So quite a lot to get through for bullish action, for bearish action. I mean, we will have a lot of buy zones in at the 30,000 range, the 28 to the 30,000 range, so there's going to be a lot of buying action there. The way that the bears do it is, if we have a quick look on the daily, they have to do it gradually. They have to gradually wind the market down. So you'll see that each time you have one of these big dumps, similar to what we're seeing now, see these big dumps, and it's met by a buy order there. So you've got a buy wall. So if the bears want to actually win this battle here, what they've got to do is gradually grind down the bears. You've got a capitulation there, you've got a capitulation there, one there, and then you see how they slowly grind them down for any chance. And when you get to these levels here, it's a do or die situation, the same as where we're at now at the moment. And you're either going to get the bulls, which think they've got a fighting chance to try and push it up, get the higher close, and then come back, retest and move on your way, or whether the bears are going to win. And it's a lot more negative here than what it was at these levels here. So it's just, we've got to see, we've got to wait until see whether we break and close below the 29. If we do break and close below the 29, like I say, we're likely to go down and retest the 21 level and the previous highs of the 2017 bull run. So with the news that's going on at the moment, and we'll move on the higher time frames, when you've got bearish action, it's always better to zoom out a little. And on the higher time frames, you can see what's happened here. So you've had your major run. This is the previous no, it was not the previous high, this is the previous 2017 high here. And what you get is, as we discussed yesterday, what you're going to tend to get in a bear market is you're going to get major downside. You're going to make a base here. You've got to wait to see where the bulls are going to react at certain levels, and this was a strong level and a strong level. So you've got the whales which are accumulated at these areas here, offloaded some of these areas here, and then you get to these levels here where, although you've accumulated at these low levels, the market smashed you straight down, and everybody's just, there's fear in the market, there's huge fear, people are selling. There's usually a world event that coincides with this, and it's a bit uncanny how that always happens. But then the market gets a chance to reset. You see on the 3-day there, you've gone above the 200 3-day moving average, and then after that, other than this crash here, which was the COVID dump of March 2020, other than that, we just managed to stay above this level here until recently. So this is signaling huge weakness in the market, and we've got a lot of levels to get above now. And where these levels here was strong buying power, buying power, they're going to end up as strong sell order power now. So there's lots of people looking to get out of the market so they can position themselves better for the next run, or to be in a better position so they're able to accumulate at lower levels. So people are going to be looking to sell at the moment. Have a quick look at Solana. So this is the 3-day chart on Solana. We've seen weakness here, and we managed to get a little bit of a base on Solana. If you want strong bullish, a strong bullish indicator, you'd want this candle's made the bottom there, and you'd want that to be higher, close above it higher, and then that is signal strength. So what we'll be looking at now is to see if it can confirm the area that it's made a base on, and then try and push price action higher. And if we can get a higher close than there, then we can probably see areas of testing here and here within this range, and the range can continue then. So that's the bullish scenario for Solana. I don't think it's going to be pushing straight out of this range and going at higher levels, unfortunately. But again, we just need to make sure that this is a confirmation, and at the moment it's not looking like it is. Shiba's doing exactly the same. See these tokens from where we've put our support and resistance levels. See, there's no support here. There's no area that's being built up at these levels. So it indicates that we're probably likely to come back and test these levels here and see if we can establish a bit of a base at these levels. So no man's land at the moment, and I wouldn't be trading, but if you just put this as an example, and you'll see that you've got your two ranges here, and you might as well toss a coin to find out which area it's going to go at the moment. It's just pretty much gambling. You're in no man's land between resistance and support. That's 50-50. Right, okay. One from the community members, it's BSW, BBS community members, BSW, and we said yesterday that we needed to hold this level here. Get rid of that. We said we needed to hold this level here, and we've managed to so far. We haven't seen the strong price action. I'll just put the volume indicator on. This was the strongest volume that we managed to get on BSW, which was back on the 1st of April 22 for the 3-day candle. Managed to get highs of 216. So that's currently at support at the moment, and we've had the strong, well, not a strong reaction, but we've had a reaction at this level, so we can see if we can come back and test this area here. If not, we might come back and confirm to see if this is actually a level of support, and then possibly if we do see a bit of bullish action with Bitcoin, we can come back and test these levels again. Ultimately, for any kind of short or long-term bullish action, you need to be coming, breaking straight through these levels, big volume candle, and then coming back, retesting, confirmation, and then on your way. But that's not likely to happen at the moment, in my opinion. So Ethereum, right, some reaction. So this is the 3 days, getting a strong reaction from the 200 3-day moving average, and we've got a lot of buy sell orders in at these levels here. So Ethereum, we need to really be, for any kind of bullish momentum, short-term bullish momentum, you want to be at least 2/3 of this candle and a close above the 200 3-day moving average. Let's have a look where it is on the daily. See, it's up here on the daily, so you've got additional confluence at these levels here, which coincide with the previous lows of this downwards move. So the way that it works, you've got your lower high, lower low, lower high, lower low, lower high. Made a little bit of a base there, come down, and these are the levels that you need to test. And if you go back and just look at that area, see how it works in a downtrend. You've got come back, you're testing these zones which coincides with the previous lows. A bit of weakness there. You've got the double bottom, a bit of strength, you've come back, just hit this momentum trend line, and you had, this is where we had the big dump in the market, so it's just managed to slap through these levels, and this is the level we need to come back and test now, which is in the region of 2716. So if we come back, test 2716 and manage to get a bit of volume and push straight through, and come back and test this level of support, then you can see some short-term action probably up to the region of, well, you need to break and close above the highs of 3544 for any longer term bullish action. But you see how you've got this big red volume candle here, got this big red volume candle here, and then you've got the big green volume candle here, and the day's not closed yet, but look how bearish that was. It's a full bodied candle, it started and it just closed all the way down pretty much to the bottom, and you've been met by this one which is nearly equally as large as that, but the bulls have just nowhere near managed to fight as strong as what the bears have here, and we're currently met by that wick from the extreme high where the bears have managed to push this candle back down. So we'll have to see how the day plays out on that one, but distance between the bottom of Ethereum from that recent move 2182 to 2716, it's a 25% move, so big. This one's let me get rid of that. This one's really bled, and people that are heavily invested with Luna, especially the ones that were buying in at these levels where it was showing so much strength in the market compared to a lot of others, certainly the altcoins, it's absolutely bled down here. And if we just put the line chart on there, we'll add some zones of support and resistance on there. We'll do it on the weekly as well. So you've got the major level here, which was the previous high back in, so March 21. It's done so well, Luna. Right. As is. Right, so we've got our weekly levels built in now. And we've got a lot to get back on Luna. See, with this big massive volume candle, we've had pretty much no volume all the way down here, and this is on the daily, don't forget. So you've had this huge massive sell wall all down there, so it's about 50%. It dropped yesterday, I think, and we had the buy-in pressure, which has pushed up to levels of $40 and lows of the day of $23, so that's a huge range in itself. So Luna needs to come back, and it's got a lot to get back from previous levels. Yeah, I mean, what you'd be looking at with this is if you just look left and you see the recent confluence, so we're on the daily, you look left and you see the recent confluence and the build-up of support and resistance, where you've just got mass accumulation at these levels, and when you've got mass accumulation at these levels, you tend to build up a base. So we didn't manage to here because we had the big bearish action from Bitcoin yesterday, and I think, to be honest with you, it's just absolutely overbought overall during the market. Luna, it's got a lot of good things going for it. Fundamentally, it had absolutely great news. They do certain things to keep the peg of Luna. They buy other assets to keep the peg of Luna, so they're on the right track. And unfortunately, when the rest of the market crashes, and the ones that have performed really, really well, they're going to crash harder. So level we want to hold on Luna is $20. $21, and highs of Luna was 120, which was not that long ago, 5th of April. Right. So we're in our area of interest on AVAX. Areas we need to get past between 55 and 57. Still got quite a lot of room to bleed on this one, so hopefully we're going to get a bit of bullish action on this one. I mean, we are due it, aren't we, really, to be honest with you? You've got the, I know I've said it a couple of times now, you sell it, may and walk away, and we were saying it in April. But when you've got massive down action like this, you've got to have some kind of a recovery bounce, even if it's just a 50% retracement or a 40% retracement, and then the sellers get a chance to come out of the market at these levels, and then we can come back and continue the move down. So we will get a recovery bounce at some point. It's just when that's going to be. You just got to wait for the price to tell you when that's going to be, and when you can see weakness in the market, because each candle you can read that. Like we said on the previous one, you've got stronger bullish candle here as far as volume's concerned than yesterday, which is the bears have managed to push the price action down with this amount of volume, and the bulls have had more volume, and they haven't even managed to get to the top of the yesterday's candle, let alone close it. So AVAX is looking weak again. Everyone's quite bullish today, and although we look at that and it tells us we've got a wall of green, people that are not actually looking at charts and just looking at this, they're thinking that it's some kind of recovery that's happening at the moment, where the chances are there's a higher probability that that's not the case. Right, okay, we said that we were at a decision point yesterday. We were at lots of decision points yesterday, and on graph we had loads of, let's have a look. See, we've got a reaction at this level here. See, when you've got buying action at these levels, that indicates a base or an area of interest, and people, if they see this kind of bullish reaction where you've got the higher close and then you've got a retest and a confirmation it's moved up, this is the area where people put their stop losses. This is the area where people think that it's a confirmation. This is the area that people are interested in, because that's the previous area where price actions recently reacted to. So you go down here and you can see how today's green candles reacted perfectly to that. The bears pushed it down. They didn't manage to push it down below the close that we were talking about, and then the bulls have had their turn. They've pushed it straight back up to this level here, which was indicated by the one that we just previously showed you, the capitulation wick. And we're having a fight on our hands now, so there's a massive tug-of-war battle going on between the bulls and the bears in this region here now, and we'll see how this holds. We want to close above here and then a retest, and then we can test these previous lows here if there's any kind of short-term bullish momentum, but we're not trading at the moment because it's too much indecision at the market. That's just me personally. Helium. So, right, helium, so let's have a quick look. See, with these momentum lines, I don't like momentum lines too much, because you can draw it like that, where it looks like you've had a break and a close above, or you can draw it like that. There's lots of different ways that people draw these, and that's why they don't hold as much value as what the horizontal ones do. So what I would look at is, we've made a base here, come back, tested this level, got a positive reaction from this level, got a higher close candle here, positive, another one there, and then we were met by a 3-bar reversal. So you've got the green, the higher green, and then you've got the bearish reversal there. So then what we wanted to do is test this level here as confirmation. So we've come back down and we've broke and we've closed below this level, which indicates weakness. So what's happening now is we're coming back, and remember what we said before, when we went on the previous one, it comes down, the market will come down like this, and what becomes support then becomes resistance at these areas. So we got the close below, we come back, we've got this negative reaction here, got the negative reaction at this level, and the bears have pushed it straight back down again. So we haven't finished the day on this, but that's more bearish than bullish as far as I'm concerned. You've managed to get the close below that level. So we're likely to continue down and retest the levels of 856 on helium. Dot tested this level perfectly. We were about here yesterday, 1226. We tested 1066, the level that we said, and we got a perfect reaction from that, and the bulls are trying to push price action. I'll have a quick look at volume on Dot. This is the one that was called by one of our, it was asked for by one of our BBS community, Grand Era. Volume. Sorry, it was on there already. So yeah, we've had a strong green volume candle, but the bears are winning the fight. They managed to pull the candle back down around 50%. So we'll have to see if we come back and test this level. Previously, what I just mentioned is we need to come back and test this level, come back, and then we can come back and test these zones here. For any short-term bullish on Dot. Same with Chainlink. Just weakness. We've got the big green volume candle. Stick a reaction at the 236, come back down and probably test these levels again, and whether we can break and close below the 236 to come back. You can see where the 618 is on here, which is the golden ratio. If we come back to the 618, can you see how this coincides? How it coincides with the previous low here. That's touched there by that candle wick. So you've got price action pushing down and reaction at the 236. If we get a reaction at the 236 and that pushes straight back down again, that indicates a strong bear reaction. We haven't managed to push above the 236 and close above it. If there's a little bit of weakness as far as the bears are concerned, we're likely to push up and test the 618 golden ratio, and if we come back, we may well come back and test these levels there, and then we can come back and test the highs here. But it's a long way up really, isn't it, these levels? I just wanted to show you how that acts as additional confluence. So we've got our zone of interest here, which is in this range here. You've got your 618, which is in that range, and then you've got your previous low, previous swing low. So that acts as like triple confluence. And if price does manage to push back up at these levels, you've got a high probability that you're going to get a negative reaction and push down at these levels here. So you'll have lots of sell orders here. You'll have lots of people looking at a Fibonacci 618 retracement. You'll have a lot of people adding in zones of interest which match up with that 618, and you have a lot of people matching up with the lows of the previous swing low. So there's lots of people looking at those levels, and there'll be lots of people selling at those levels, so that's why you're going to get that negative reaction. Right, this one's for the BBS community, and I just wanted to show you guys something on here, which, look at this, 120.39% that was, and it started exactly where it finished exactly where it started. Look at that. Huge. So that's the BBS highs, was 21 cents, currently at just under 8 cents. So there's a lot of people upset about this in our community, but if you're cashing out at these levels, you're better off, really, especially if you've got a lot of belief in it. So we made a base here, sorry, we've got a strong base here, and this is going to be a strong zone of interest in the future here. And you see we made this base, we've got the candle close below here which signaled weakness because you have the capitulation, the buyers pushing up here, the buyers pushing up here, and the buyers kept winning until you had this candle here which signaled weakness, where you haven't got the buy power that you previously had. So you got weakness in the market there, and you managed to close below here. You've retested this area which was coinciding with the previous low there, like we said. Negative reaction from that, and then you continue your downwards move, test it again, negative reaction, downwards move. That was just a freak, that one. Something going on in the market there. Then you continue your move down, it's pretty much gone straight down ever since, and we're at levels of, well, it's 78 cents, it's 0.78 cents. But we're not paying for these tokens, we get them free. So, more that you can get when you're cashing out on them. Have a quick look at Moon River. Right, Moon River, it's just been down, down, down since its inception. A lot of people have been talking about Moon River as well. It's don't know too much about it, to be honest with you, actually, but I know there's a lot of people have been talking about it. So you got your first day on Binance, started at 386.70, we went up extreme highs of 541.20, straight back down, closed the day at 396.10. That's 37, just over 37%. Back down. Got a reaction here. Bulls have pushed price action back up, even though this is a bearish candle. The bulls have managed to push price action back up, established a base here, and then your price action's traded in this range here. You've got your close, come back, you've got your retest. Price actions hit down here by this capitulation wick here, and then you've made your base again. Negative reaction, retest, back down. Made your base again. Negative reaction, retest, back down. And we're doing it again. So we're having that retest now. So we're at the retest of this base that's being made here. And for any short-term bullish action, we need to be above this range here. So you need to come back, a bit of volume, and then we can come back and test these areas here again. These areas here where it made a base there, and see if that acts as support or resistance. Sorry, as a resistance, and then we can break through and become support. So that's the level that you need to test. One last one, crypto.com. All down. So look how far that's got to come back up to its 200 one-day moving average. So have a quick look and measure that. $113.68%. so it's currently at 23. That was the extremes there. So areas we need to break, and it's not even going to be short-term bullish to break these areas because it's got lots of other areas of resistance to get through as well. But these are the areas you're looking at, your zone of interest between the extreme highs and the extreme lows of the previous swing high and swing low. So what you'll tend to see is you either, if it's a strong trend, you'll get a reaction straight from this here, the low, and then it'll continue down to test this level and see if we can break that level and continue in its trend down. Or if it's got a little bit of strength, you'll see the price action come kind of range in this level here and see if you can get the top within these levels and then come back and test here. And if it's a weaker trend, it'll come back and it'll test the current high at the previous swing high and then continue. And if it's a broken trend, short term, so we've got these levels to break and close above as well. So shorter term, you've got, in an ideal world, what we want to see is a close above this level here, above the previous swing high, and come back confirmation, and then probably go back and test those levels here against the 201 day moving average. But that's a few things that could happen, and you've got to wait for the price to tell you what's going to happen or what's more likely to happen, because ultimately it'll do what it wants, but we've just got to stack up the probabilities to find out what's more likely. So that's all I'm going to go over today. A bit of a short one today, guys. Let me know in the comments what altcoins you want me to go over tomorrow. I'll be happy to. Enjoy your day, guys. Bye now.